Okay. Okay, I'm going to open up the webinar. I'll give a brief introduction and we'll get started. All right, we're going to give everyone a second here to get in from the lobby. We just opened up the presentation. All right, let's get going. My name is Greg Burns. I'm an analyst at Sidoti. I'd like to welcome everyone here to Sidoti's May Microcap Conference, and thank you to SuperCom, ticker SPCB, for presenting for us here this afternoon. Today from the company, we have Ordan Trabelsi, the company's president and CEO. He's going to run through a presentation. And then we'll get to as much Q&A at the end. If you do have a question, just enter it through Zoom. We'll get to as many of those as possible. Ordan, the presentation just closed out. If you want to just pop it open again.
Okay, got it. Yep. How's that?
Yep, just started up, so you could take it away.
Okay, great. Thanks for having me, and thanks everyone for joining today. I said I'm SuperCom CEO, Ordan Trabelsi, and I'm going to happily run you through our investor deck as of May 2025. Some interesting updates in progress, and then at the end we'll have a Q&A session. Safe harbor statement, general, for a moment. And now about SuperCom. So those of you who don't know, SuperCom has been around since 1988, and we're a global provider of electronic monitoring solutions for governments around the world. Our current focus in recent years has been on offender electronic monitoring, which essentially ankle bracelets to track offenders at home while they're moving around in GPS, against alcohol, domestic violence, and so forth. And we'll get into that very shortly. Our ticker is SPCB, and I myself, the global CEO, have entered this position in 2021, together with others, with new management that has come in, and we've tried to, improve and change some of the things in the company, hopefully for the better. In this period, since we came, the company's grown at a 31% CAGR top line, and EBITDA has grown multiples. We reached an EBITDA of $6.9 million over the last trailing 12 months. We're also expanding our reach through many new projects around the world. In Europe, we have had a very nice win rate and continuously won, and we'll see that soon. We reached the 7th national domestic violence project globally. And in the US, which is our expansion in the recent year, we've been experiencing rapid US expansion with over 20 new contracts and in 9 new states since the summer of 24. We have a nice track record, over 70 government projects that we've won, and we've issued over 120 patents. Our mission, taking a step back, is to revolutionize public safety worldwide with innovative electronic monitoring technology and complementary services. Now, to understand what that means, we're going to look at the worldwide challenges in the criminal justice system. We're seeing high recidivism rates, prison overcrowding, excessive costs, and at the end, unsafe communities. We'll dive a little bit into each of them. So recidivism rates, the likelihood to be rearrested for crime within 5 years in the US is 75%. That leads to very high prison population rate, and the US is the highest in the world with 571 out of 100,000, which is more than 0.5% of the population in the US currently incarcerated. You see the numbers are much higher than those of England and Belgium and other European countries. But in the US, like the other countries, we still see prison overcrowding, which is a big problem. Many nations around the world, there's no room for people to sleep, and they end up sleeping in turns or fighting over the same bed. And this scarcity of resources create even more conflict within the prison environment. And of course, running these prisons is very costly. Over $80 billion annually is spent running prisons in the US alone. And if you moved everyone, for example, to house arrest, you would save 90% of those costs. And you see the cost per person for operating a prison of $36,000 cuts down to around $3,000 for house arrest. And when someone is at home, you're not just saving costs, you're also providing them an opportunity to study, to raise kids, to help their parents, to help others, or contribute to society, rather than being in prison where they just learn bad habits and progress the problem that started in the first place that brought them to prison. So the market, we see it's growing consistently in many different regions. Projects that started off 10 years ago have been growing and growing and growing, whether it's in California or in Florida or in Sweden or in other places around the world. And that leads to a general market growth of roughly 7% expected in the coming years. And that's expected to reach $2.3 billion in 2028. See, the US is roughly 6 times the size of the European market in the slide. And that's what excites us with some of the growth we're seeing recently, and some of the expansion is into the actual US market. The market is barriered, highly barriered. There's only 10 players around the world, high barriers to entry, and it takes 5 to 10 years of experience deploying exactly these solutions to even bid on a project like this. So you're not going to see a Google or Amazon tomorrow come and start bidding in the industry. You have to show experience. You have to show that your technology works and it's been tracking offenders effectively for a long period of time. And we've been building that track record, building that experience. That what makes us, a very effective player today when we compete on these opportunities worldwide. Here's our technology, proprietary tech that we developed in-house, Pure Security Suite. We have Pure Monitor software that runs on the cloud that essentially tracks and shows you where the offenders are at any given moment. And there's exclusion zones and inclusion zones. We also see here the Pure Tag ankle bracelet, which is a lightweight bracelet with a battery life of up to a year and more, longest battery life in the industry, and that synchronizes with the Pure Track. On the Pure Track, the software on the phone, and we have the Pure Track, Pure Protect, the domestic violence solution. We have the PureCom house station, and the Pure One, which is all-in-one one-piece tracking device, which doesn't require the phone, which we added to our arsenal of capabilities and of tools, and that's being very popular in the U.S. market and has been helping in our expansion. With our technology, we're able to support a wide array of programs, from house arrest to GPS monitoring, domestic violence, inmate monitoring, alcohol monitoring, and rehabilitation services. And domestic violence is an interesting one. As I said earlier, we've won our 7th national domestic violence program in the world. We're a leader in this space, and our technology with the smartphone together with the ankle bracelet allows us to create an architecture. Whereas if we put a bracelet on an offender, they can't come close to the victim because their phone will alert. And that creates a new paradigm, a new architecture, which is very effective, utilizing our technology to do domestic violence more effectively in various places in the world. Our solutions create positive social impact and they improve public safety. It's not just a theory, we see it in practice. We're able to help eradicate domestic violence, increase public safety. They offer rehabilitation and proper reentry to society with our services, where you can reduce incarcerated population sizes in the regions where we work. And we've seen that electronic monitoring has improved to reduce recidivism from the number I talked about, 75%, all the way down to 35%. So with all this, we're also cutting significantly government expenditures. So how do we win? We get asked a lot, and we have a nice slide here that describes, with our technology, we put over $45 million into R&D over the past years, and that helped us develop this Pure Security Suite proprietary technology, and we're able to offer significant advances compared to the competition, and such as significantly long battery life. And since our battery runs for up to a year and more, and since the programs run for less than a year, you never have to charge it during the program. Ultra lightweight, next-gen location tech. We can track subways within buildings, within cities. We can synchronize with multiple methods of biometric authentication and multiple methods of tracking, including Wi-Fi tracking, including Bluetooth and RF, and together with GPS and GNSS, and we have video calls, two-way communication, and the domestic violence protection. And that all together in Europe has led to a competitive edge and a win rate of over 65% in national government tenders in Europe. In Europe, as we're newer to the industry, we started with small projects like Lithuania and Latvia, which were $100,000 or so, and slowly grew to Denmark and Finland of 3.6 million, or Sweden, a Ministry of Justice of $7 million, and Romania project of over $33 million, which is mainly a domestic violence project, which we announced several years back. There's still opportunities in Europe that are large, of the size that we won, and much larger also. And after we have this track record that's growing in Europe with over 15 national project wins, we're able to much better compete. We also today have a strong balance sheet of $17 million in cash. We lowered our debt balance, and we've been able to show more stability, which is important to some of these government customers. And our performance over recent years not only reflect a stronger track record and great technology, but also a more stable and more predictable base, which gives comfort to a potential government customer. We're expanding in existing geographies and in new ones. And it's interesting to note that in many of these geographies, once we put our foot in the door, like in Sweden, we displaced an incumbent vendor of 24 years. 24 years they were serving the government. We came in with our technology, showed our capabilities, and we displaced them and won. And after we won the first project, the Ministry of Justice, we shortly after that won another project for the Swedish police for domestic violence. And then we won juvenile. And now there's another RFP out in Sweden for another project, which is a substantial size that we're looking to compete for. But the idea is once you put your foot in the door, you can add more and more projects. Romania, we launched the first project, which is 15,000 enrollees simultaneously, which is massive. And we expect and hope that they'll do more projects, just like in Finland, we saw that they've done another project. In Croatia, the first project was ours, and also Romania. So we're either the first in the country or we're displacing incumbents, and then we add more and more projects. In Israel, they had a 20-year incumbent here, nearly 20 years. We're just awarded the project of 5 to 10 years, and that will encompass all electronic monitoring programs in the country. The original estimate was 1,500 enrollees simultaneously, and the rapid deployment was completed at record speed, and there's potential for growth, especially when you have something that's all of the EM programs in the country. As the country evolves and wants to put more and more EM solutions, we will be the natural vendor to do that. In the US market, which we saw is estimated to be 6 times the size of the European market, we've been experiencing accelerated expansion speed, faster than we had in Europe. And since the last summer alone, we saw 20 new contracts and entry into 9 new states. And that's very exciting for us. And some of these contracts are smaller because they're initial. You have to start small and then grow. But they're helping us plant seeds into many different locations throughout the US. And then when our technology performs well as it has in the past, we get more references and more word of mouth marketing and more expansion within every one of these regions and adjacent regions. So we've also signed 6 regional service provider partnerships. And these service providers are important because they have been in the market for years. They've tried all the technology. And if they chose us, that means that they like our technology after seeing everything else. It's sometimes even more of a signal to your success than having a new government customer, which might not know all the technology that's out there. So we've signed on direct contracts, we've signed partnerships, and we are, just yesterday we announced another one in Virginia, which is 9 states in the last year, and we continuously displace the incumbents. And together with that, we've been maintaining our presence in California through an acquisition back in 2016. We acquired LCA, and after that acquisition, not only do we replace their technology with ours, we also were able to win over $35 million in bids in California since the acquisition. So you can see here, we're entering into many new states, expanding within existing states, and starting our expansion into the US market, which we're excited about. Now, it's important to note that the US, not just larger in size, but also the margins are larger because everything is on the same platform on the cloud. It's all centralized. It's all in the same language. It's easier than when in Europe, we have to customize the language, customize the programs, launch the software on different server farms with different governments. Here, everything is much more streamlined. And so it offers for higher contribution margins per bracelet. And we expect over time to see, as revenues in the US grow, to see expansion of margin as well for the US market. Our growth strategy has multiple layers. We're, on one hand, looking to win more large-scale national projects in Europe. We have a good reference, good track record. We know how to work in Europe well. We're looking to expand our footprint into the US through entering more states, doing direct bids, and through partnerships with service providers. We are open to acquiring service providers as we did in California, and there's others throughout the US, and that would strengthen our market presence because we would have not only immediate synergies by replacing the technology of other vendors with ours, but also a presence in those locations where we could win more contracts in a more effective manner. We're enhancing our sales. We used to be just passive and bidding on. Now we're more active, and we're enhancing these proactive sales efforts to streamline our sales cycles, and we're innovating continuously to unlock new growth opportunities, such as domestic violence solution, which was a sub-market, but we really capitalized on it and showed how our technology, our architecture could work extremely effectively in tracking and preventing domestic violence, because our bracelet that we put on the offender, it's lightweight, non-intrusive, you don't have to charge it, and it could track and make sure that that offender is not close to the victim when there is domestic violence situations. It's interesting to note a lot of our revenues are recurring because a lot of these projects are recurring in nature. In the US, almost everything you get paid per unit per day. In Europe, there's a mix. Sometimes they have these, ongoing recurring revenues. Sometimes it's reoccurring revenues of a countries that keep on buying in a consistent manner. But either way, you're looking at long-term projects. Like I said, in Sweden, we displaced an incumbent that was there for 24 years. In Israel, that was there for almost 20 years. And many of our customers also in the US, California, have been with us for 10, 15 and more years. And so as we enter these markets and put our foot into more locations, we expect there to be long-term revenues. Even if the initial contract is 5 years or 9 years, there's usually rebids and you have a higher likelihood to win if you're already there and you're doing a good job. So long-term government projects help create a nice base for us as we go into the future. The revenue trends are interesting. For those who have looked at the business, we've been around since 1988, and most of the history was a legacy business of identification. But around 2015-16, we decided to shift away from legacy business, which was mainly in developing countries, mainly in Africa and South America. And we moved to this tracking of offenders business. We call it electronic monitoring, IoT tracking, or public safety. And that has been growing since 2015 at a CAGR of 55% nearly, and has been shown a very nice shift away from the legacy to the existing business today, where we're seeing not only growth, but also a very high presence in the developed markets where collections and predictability is higher. The industry has grown in the last few years at 14% on average, and we grew almost 3 times that speed. So within the industry, we're growing faster than others, we're displacing others, and the industry is growing altogether. We were able to optimize and show operating leverage and grew our EBITDA from $200,000 in 22 to $6.3 million in 24, showing multiples of growth of EBITDA over these years, together with, as I said before, top line growth, a CAGR of 31% for the company in total in the last 3 years. Some investment highlights. To remind you, we're looking at a nice market of $2.3 billion, which is highly barriered in size. There's large growth potential there. The US market, which we're entering into now effectively, is 6 times that of Europe. So there's a nice opportunity there, also with better margins in Europe because of the structure of the US market, which is all in one language, centralized on the cloud, and very similar in nature. We're seeing rapid expansion into the US market. As I said, over 20 new contracts and 9 new states since last summer alone. High revenue growth. The electronic monitoring business, which is tracking of offenders, which is roughly 90% of our business today, experienced 41.7% CAGR in recent years, and our trailing 12 months EBITDA is roughly $6.9 million with a 25% EBITDA margin. Q1 that we just announced a week or 2 ago showed a net income of $4.2 million and an EPS of $1.2 million. We have high recurring revenues, long-term government contracts, and we have a very strong R&D base, a strong moat, competitive edge through our technology that we invested over $45 million developed, and we have a nice patent portfolio as well. Looking into financials, just for a moment, we'll start with the balance sheet. So, as I said, and this is important for us as we compete around the world with larger projects, and there are various large projects out there. There's the ICE project of over 100,000 units for the federal project in the US. There's projects such as in England that they're expecting large projects to come out. And when you're looking at these large projects, having a nice cash base and improved balance sheet is helpful. So we have a cash balance of $17 million. Our debt has been paid down. A third of it's been paid down over the last year or so. And right now, our book value of equity is roughly $35 million, with total assets of 64 million. Our stock price has been moving recently, but we're looking at roughly 4.4 million shares and some pretty nice volume of 225,000 shares. And our financials, our P&L in 2024, $27 million, which is the fourth year of growth consistently after 3 years of decline before new management came in 2021. We had gross profit of $13 million and EBITDA of 6.3, and Q1 on 7.1 million, which is a slight revenue increase from the previous year. In our Q1, we had a gross profit of 4.5. That's gross profit of 63%, which is a record level for us, and net income 4.2 million and EBITDA of $2.5 million. With that, through the presentation, and I'll open up the call if you're able to take questions.
Yeah, thanks, Varun. We got some time here for some Q&A. So maybe we could start off with you mentioned maybe some immigration opportunities with ICE domestically, and maybe there's some in Europe. Maybe you could talk about the opportunity there for you. And there was a question which in the chat, which maybe aligns with this, but do you have any disadvantage competing for U.S. business being an Israeli-based company?
Okay, so the opportunity in ICE that they're detaining people across the border physically in detention centers. They're trying to move a lot of them through to tracking with the ankle bracelet. This has been going on with some time. There's been huge growth in that specific project over the years. We've had incoming requests for potential offers from representatives of the government or from the vendor who has it today, which is a BI. But the government has shown interest in expanding that to multiple vendors, and also that opportunity is up for bid again soon. In Europe, I said in England, they have a big opportunity coming up, but it's not just them. There's always these projects coming for bid, and there's sub projects in various aspects of it. We, as an Israeli company, have not had problems winning projects in Europe and also projects in the US. As you've seen, we announced 20 new contracts directly with various counties in the US, and also partnerships that we're deploying units through. So we've been performing well, and I think the technology speaks for itself. Before the customers take the technology, they try it out and they see how it performs. And I think based on what we see, it performs very well, and they talk to other colleagues in the industry and more and more growth. So we like to under-promise and over-deliver, so we're not going to promise anything specific, except for the fact that we're going to continue executing and try to expand our presence. But there are massive opportunities out there, like the ICE project, like if you look at England or France or Italy or Germany, there's big projects out there that we not yet won. And we think with our capabilities, we have the ability to do so in the future. And so we'll continue competing. And in the US, we just started with the smaller projects, and we're growing in size, just like we've seen in Europe. We'll be able to hopefully expand the size of the project wins, and all the small ones that we win today, see them grow and grow to larger projects.
All right, great. And then maybe you could talk about a little bit about the stock's performance relative to the improvements you've seen in terms of revenue and EBITDA growth, and the improvement you've made on your balance sheet. What do you think is driving maybe the disconnect in the market versus how the company's been performing?
So we've gone through a transition that I talked about. We were a legacy business of identification tracking, and we shifted from that business almost completely to the electronic monitoring business. And there were some periods of blurriness. It was hard to understand what exactly was going on. But when I came into this role, 2021, it was after the cash burn was roughly $9 or $10 million a year at the time from operations. In this last year, 2024, our cash burn from operations was roughly $1 million. So we've been improved significantly, and it took people a little while to see that. Still think there's a lot of unawareness in the market, and just in the last period of time, less than a year, with the announcements in the US and with meetings with investors, people are starting to get more accustomed to the story. We're still trading at multiples which is significantly lower than our peers. If you look at companies like Geo Group or big technologies, PLC, see that their multiples on revenues, multiples on earnings are significantly higher than ours. And even though in the industry we're growing at higher, it was roughly three times, almost three times the industry general growth. So we're performing well, and we had a win rate of over 65% win in Europe. We're performing well, we're doing well, and over time people understand the story. And I think the things will start to balance out, but it's a process, and some of the transition over the recent years, I think, has made it a little tricky for people to understand.
Okay.
Also, the outstanding debt, we had a pretty high debt balance, and that's been we paid a third of it down, and our latest amendment of the debt that we announced in January pushes the debt out December 2028 for our senior debt, and the payments are due at that time, so we have a nice runway, and the interest rate on our debt currently is low. It's between 5% to SOFR plus 2.5%. So I think we're in a very good position in terms of that, and we have a good position on our cash on our balance sheet, and we have a good track record that we're leveraging. So our situation is pretty good for continued expansion.
All right, great. Thanks for that. We're at the end of our allotted time, so if you had a question we didn't get to, hopefully you have a one-on-one scheduled with the company. You could have it answered in person. But with that, we'll wrap it up. Thanks, Don, for presenting. Thanks everyone else for listening in.
Thank you, Gregory, and thanks everyone. Have a good conference.